All right, y'all, welcome back to the channel. Now, today, let's talk about LightStream Loans. Now, this is a personal loan that has been pretty popular lately, and honestly, one of the best loans and interest rates for me and my clients as well. So, I want to talk about LightStream Loans. I want to give you guys some data points, some information, some things that you should be aware about if you are looking at going this route and or applying to a LightStream loan with Truist. Now, if this is your first time on the channel, my name is Zach. Some people call me Rip. This is where I talk all things personal credit, business credit, and of course, travel hacking, the fun stuff. And I work with business owners and entrepreneurs, help them get access to high limit funding. So if that's you, check out my links down below and get in contact. But let's jump into LightStream. Now, first off, who is LightStream? Now, they are a division of Truist Bank. Formerly, Truist Bank used to be SunTrust or BB&T. Then there was a merger. But literally, as of 2 weeks ago, LightStream finally actually incorporated their loan process into Truist. So now, just like you'll see here, LightStream by Truist, just a couple of weeks ago, they incorporated their website together. So they specialize in unsecured personal loans. They target borrowers. They want borrowers that are good to excellent credit. And I'll talk about some of the other things involved with that, which is really important in the application process. And it's a pretty simple process, 100% online application and funding process. Typically, you get that loan or the amount that you get approved for within 24 to 48 hours in your bank account. So one of the key features with them is they do loan amounts between 5K and 100,000. Now, I will say the sweet spot with LightStream is typically between 20 and 50,000. It can be lower than 20, but 20 and 50,000 typically requires kind of no additional documentation. It just requires kind of a good personal credit setup, a credit profile, good DTI, which I'll touch on later. Now, when it comes to their interest rates, it's about 7.5% to 25.5%. Obviously, if you have worse credit or worse debt to income or other things on your profile, the interest rate's going to be higher. I'm going to show you guys some applications or some data points from applications from clients of mine towards the end here. But those terms, they do go up to like 144 months depending on the type of loan, but typically most of the loans are going to be 24 to 84 months. One of the good things with them, no origination fee, no prepayment or late fees if you were to pay it off. And like I said, those funds can be deposited in the same day or next day. Typically, it's that 2:30 Eastern mark. But I will say I did the LightStream loan myself, and I applied past 2:30, and they were in my account the next day. So it really kind of depends on the volume they are doing and the time at which you are applying. When it comes down to the criteria that they are looking for, they typically are going to approve and like individuals who have good to excellent credit. I recommend 680, but honestly, as of just currently, April, May of 2025, a 720 is going to be a lot more viable. I have seen some denials on some individuals with pretty decent credit reports and a decent setup. But earlier in the year, I will talk about a high utilization client of mine where we're able to get approved. So it really depends, but it's how you really structure your application. Of course, having a strong credit history with multiple account types, having different credit cards or different banking relationships, right? That helps. Having, proven ability to save. If you have assets and investments in your application, you have other cash available, that's good. Stable and sufficient income, employed or self-employed, but typically employed obviously works better because they know that you're getting a certain amount of money coming in to your bank account every single month. But yes, having assets and investments, having a good structured profile when you fill out the application is going to be good. So let's move on from there. Their main loans are going to be, home improvement, new auto purchase, used auto purchase from dealer, used auto purchase from individual. These are all of their loan purposes and the options that you can choose from. One of the cool things about LightStream is typically if you do actually get one of their loans, let's say you do a auto purchase from an individual or dealer, they don't require any type of title for that. So like I said, it's an unsecured loan. So you can use that money towards whatever you need to. It doesn't necessarily need to be specifically an auto loan, but I'd recommend honestly an auto loan or a home improvement loan. And one of the cool things about LightStream is after you have about 3 to 6 months of payments, always set up autopay. I highly recommend that you always set up autopay with loan payments or credit card payments. But when you have 3 to 6 months of on-time payments, they will allow you to then apply to another loan because they've already shown 3 to 6 months of payment history. Now they do pretty much have from my understanding, it's a 100K limit or 100K in total of loans with LightStream. So if you get a 35K loan with them, you can then get 50K. I would say if you're trying not to show additional documentation or income statements or any additional stuff, I'd stay under the 50K, but then you could get another 40K or another 35K loan essentially. So that is something really cool about LightStream that most places don't necessarily offer, but LightStream is pretty good at that. Now, when it comes down to their loan examples, like we talked about, it's anywhere from 7.5% to 25%. So here's just some examples. If you were to take out a loan, obviously they have calculators on their website that can show you this. $10,000 loan, depending on your credit profile at 60 months, it's about $210 a month. If you go up to $50,000 at 8 or 9%, that's about $800 per month. Depending on the type of loan as well, you can get lower interest. So the used auto loans can be as low as 7.5%, but the lowest at the home improvement is 8.5%. So there's small little swings as well. When it comes to that, I would recommend, even if you're trying to debt consolidate or pay off credit cards with the loan, then I would still do used auto purchase or home improvement over debt consolidation, as it'll be higher interest rates, and you can use that money how you need to pay off that debt. So this is really an example of what that would look like. Higher interest as well. I will show you guys an example of a high utilization from a client of mine who got approved for around 11% for 25 to 35,000 as well. So that's around $440 a month. Obviously, you get like 0.5% if you set up autopay. So set it up, but we also never want to get missed payments. My advice, if you are actually going to utilize the loan in any way, whether it be for an investment, whether it actually be for a car, but I'd recommend probably getting car loans with a local credit union that you have a relationship with. You'll get lower than 7.5% typically. Or if you're trying to consolidate some debt or pay off some debt, front run your loan with the loan. So let's say you have a $25,000 loan at $440 a month. Take the bank account that you attach, take 10 months or 12 months of that loan, 6 to 12 months of that loan, the amount, and put it in that bank account. Put $5,000, put $8,000 in that bank account so that you have a year of payments and you don't have to think about having to make additional payments off your current income. You're front running the loan. It allows you to utilize the loan even for those payments as well. I just think that's smart just in terms of a stress standpoint. So that is my advice for you. Use it for paying off some of the debt, and then, of course, utilize the rest for what you're getting the loan for. Now, let's talk about some plays that I posted in my free community. If you're not there, the link is down below. You can go check that out. It's free information. It's free plays. It's free travel hacking. It's free loans. It's free information and data points on stuff. Now, I blocked out numbers and information, so you can check out those numbers if you join the group. Links down below. But yes, like I said, typically you're going to get better options with home improvement or auto versus something to debt consolidation. Up to 50K, no docs. More than that, they're typically going to ask for more. Standard, a lot of people will do 72 months, 4 to 5 years, between 3 and 5 years. So this is a client approval. They got the lowest interest rate at 7.6%. Yes, they did have an 800 credit score. They had great credit limits, 80 to 90K in credit limits as well. And they really didn't have much comparable loans. They had a small comparable pledge loan of like $5,000, and then they had another like $10,000 or $12,000 car loan, which is going to be important with the high utilization play here. But no prior relationship needed, enabled auto pay, unsecured auto loan, and then of course did employed, as that typically works better. And yes, this is kind of a breakdown I dropped in the group. Monthly housing costs, you're going to want to have it to be lower. Of course, make sure that if you are doing your annual income, that it's somewhat realistic within 10 to 20%. You don't want to put in completely fake or fabricated numbers. Obviously, this isn't financial advice, but I recommend that my clients and yourself are, trustworthy within your applications. But this was literally a 35K approval at the lowest interest rate back in February, and it was in the account the next day. So really nice. Now, a lot of people don't really talk about this as a great spot for high utilization or lower credit. But I actually had a client and figured, hey, might as well. Unfortunately, with LightStream, it is not a soft pull. So a lot of lenders and loans, you can do a soft pull and it's no effect to your credit. But the good thing is you can also remove inquiries. So one thing I will say, if you have a lot of inquiries with LightStream, when we talk about certain requirements of LightStream, if we're talking about certain requirements and eligibility, if you have a lot of inquiries, make sure that you remove them. I highly recommend you remove them. LightStream will pull from TransUnion. So they'll pull from TransUnion. And if you have more than 3 or 4 inquiries, I've heard some people of still getting approved. Obviously, if those inquiries are over a year to 2 years old, then it's not that big of a deal. But if you have 3 or 4 inquiries, get those removed. I have a free inquiry removal guide you guys can check out, or me and my team can remove those as well if you need multiple things on your credit report removed. But you don't want to have a lot of inquiries because it shows that you are trying to access a lot of credit or a lot of funding at the time. So this was a high utilization play. Now, they actually tried to get a pre-approval from SoFi. They gave them a pre-approval at like 19.5%, which was literally almost double what they are approved for here with LightStream. Now, they literally had 50 to 60% utilization at the time. They didn't have a good score. They had a low credit score as well. And they were approved on the spot within 5 minutes. They got an email of the approval 5 minutes after the application. 11.3% interest rate, of course, having higher utilization and a higher credit score. The thing is, when I say the structure of your application is important, this is why. You want to make sure that your debt to income is solid. All they really care about is that you have enough money to be able to keep paying the lifespan of that loan. So think about your income, think about the additional bonus income that you might have with a side hustle or a side job or a second job. If you have equity in the home, that can help, or either way, right? Of course, having the amount of money in your savings, this is where we talk about debt to income. If you have a certain amount of money in your savings or retirement assets, that gives them a more green flag that says, even if they aren't making a ton of money from the salary, they still have money to pay this loan off or pay it off completely. So that was important in this scenario. The other important thing is having comparable credit. So this specific client actually had a 45K car loan where like 25K of that was already paid off. So there are 50 to 60% of that paid off. So having a comparable car loan on your report is good because it shows that you're already making payments, you have a strong payment history, and that they have a comparable loan of 45K, which was over their 35K approval as well. And it shows that they can handle a loan like that. So your debt to income should be important. How you structure your profile is also important. And then having comparable loans are going to help you. Loans that are obviously paid on and being paid and have good payment history are going to help you if you have a lower credit score or higher utilization. So you guys can check that stuff out in the free community if you would like. When it comes to LightStream, at least recently compared to earlier in the year, they have been denying some people as well, but they're still honestly one of the best loans out right now and the best possible options with the lower interest rates. A lot of people talk about SoFi or Best Egg. I've been seeing them giving almost double the amount of interest rates compared to LightStream. But the con of LightStream is, there's no pre-qualification or soft pull like a lot of loan companies, which is good. Always go test the market, go do soft pulls, see what you're pre-approved for, and then decide what you want. When we talk about the structure of the application, stricter underwriting, income, assets, credit mix, right? It's how you structure your application to make it look better in their eyes to approve you. And it is an online process. If you like going in and shaking hands and no physical branches and having a relationship, that could be a downside, but I would say for a majority of people, it's actually a plus. Pros of LightStream: competitive rates, obviously for good credit, very good options, low interest rates, unsecured loans, no origination fee, no fees on prepayments or anything of that sort. And they give large loans up to $100,000. But like I said, I say the sweet spot is between 15, 20, and 50K. I'd stay below 50K unless you obviously have additional documentation, have the income, have receipts, things of that sort to be able to provide to them. And they get to you as fast as 24 hours, 48 hours. So they do have a beat competitor rate. I personally have not really used it because most competitors haven't been as good as LightStream over the last 6 months. But yeah, that is the breakdown of the LightStream loan option. If you guys got value or you have questions, drop them down below. If you haven't, hit like and subscribe. And of course, if you need help with structuring your own applications, maybe you are a business owner, maybe you need to optimize your personal credit as well to be able to get access to business credit, or an entrepreneur who's looking for guidance or consulting on how to be able to scale and grow your business with business credit, reach out to me in my links down below. I enjoy working with you guys, and I'm excited to speak to you guys more. And let me know if there's any other video options or ideas that you guys would like more information on. Drop them in the comments. I'll see you guys in the next one. Peace.